Hello everyone, myself Pavitra, Assistant Professor, Department of Commerce, St.Josephs Arts and Science for Women, Hosur. Today topic is Introduction of Auditing. Agenda: Introduction of auditing, meaning and definition of auditing, nature and importance or features of auditing, advantages of auditing, disadvantages or limitations of auditing. Introduction. The word audit is originated from the Latin word audire, which means to hear. In early days, an auditor used to listen to the accounts read over by an accountant in order to check them. Auditing is as old as accounting. It was in use in all ancient countries such as Mesopotamia, Greece, Egypt, Rome, UK and India. Auditing evolved and grew rapidly after the Industrial Revolution in the 18th century. With the growth of the joint stock companies, the ownership and management became separate. The shareholders, who were the owners, needed a report from an independent expert on the accounts of the company managed by the board of directors, who were the employees. In the earlier days, whenever there is suspected fraud in a business organization, the owner of the business would appoint a person to check the accounts and hear the explanations given by the person responsible for keeping the accounts and funds. In those days, the audit is done to find out whether the payments and receipts are properly accounted or not. In India, the Companies Act 1913 made audit of company accounts compulsory. With the increase in the size of the companies and the volume of transactions, the main objective of audit shifted to ascertaining whether the accounts were true and fair rather than true and correct. Hence, the emphasis was not on arithmetical accuracy but on a fair representation of the financial efforts. Meaning of auditing. Auditing is the systematic examination of the books of accounts and the other documents of the company, which is conducted with the main objective of knowing whether the company's financial statement shows a true and fair view of the organization. In simple words, we can say that auditing is a conduct an official financial inspection of a company or its accounts. Definition next is nature and importance or features of auditing or audit. So the various definitions of auditing are first one is systematic and scientific examination of stocks and financial statements. That means it is through intelligent, analytical and critical examination of the books of account and the financial statement prepared from the books of accounts. Second point, inspection, checking, verification and accruing. So auditing, that is, it is a systematic and scientific examination, involves inspecting, checking, reviewing, ascertaining, examining and verifying the voucher supporting the transactions. Third one, verification of assets and liabilities. Auditing implies even the verification, that is the physical inspection of the assets and liabilities or the business as shown in the balance sheet. Fourth one, examination at the books of accounts and records by an independent person. Auditing is the examination of the books of accounts of a business prepared by others, that is by the employees of the concern. Fifth one, examination of the books of accounts and records by an independent person, that is by a person or a body of persons who are in no way connected with the preparation of the books of accounts. Sixth point, examination of the books of accounts by a qualified person. So practicing chartered accountants are the persons qualified for the job of auditing. Seventh one, examination on the basis of documentary evidence. Auditing or audit examination the books of accounts in on the basis of the documentary evidence such as invoice, receipts, vouchers, debit notes, credit notes and other documents and the informations and explanations given by the person in charge of the maintenance of accounts. Eighth one, examination of accounts may be made throughout the year or periodically. Auditing or examination of the accounts. of the business may be made throughout the year or periodically. That means it may be quarterly also. Next, ninth one, ascertainment of the authenticity and accuracy of the financial information. Auditing examination is made for the purpose of ascertaining whether the financial figures found in the books of accounts properly authorized and accurate. Last, expression of opinion about the truth and fairness of the financial statements. Auditing examination requires the auditor to express his opinion about the truth and fairness of the financial statements. The auditor is required to report to the persons who have appointed him whether the books of accounts have been maintained as required by law, or whether the profit and loss accounts gives a true and fair view of the profit or loss of the business for the financial period, and the balance sheet gives a true and fair view of the state of affairs of the business at the end of the financial year. Next, advantages of auditing. So there are certain advantages of auditing. So that is, first one, correctness of accounts. The auditing ensures the correctness of the account of a business concern. The true and fairness of financial statements are certified by an auditor. Second one, detection of errors and frauds. The auditing enables the detection of errors and frauds in the account of the business concern. Third one, prevention of errors and frauds. The auditing enables to prevent errors and frauds by checking the transactions again and by putting a moral checkup on the dishonest employees. Fourth one, alertness. The auditing